What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is October 26th of 2022. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's update, we got to talk about the fact that Bitcoin has just put in its highest price level since back here in September of 2022. Nearly a month and a half as Bitcoin comes back up above the 20K level, and it breaks through the descending line of resistance that we've been tracking here on the channel. Now, you guys know we've been generally holding on to a generally bearish sentiment, but could this be for a chance for the bulls to possibly break through and start tracking higher and potentially kick off the next bull run? I want to talk about the signs I would look for here before I make an entry and make that bet. Let's go ahead and kick things off. If you enjoyed the video, drop a like, and let's go ahead and dive into the conversation. All right, so as you all know, as I mentioned before, we've been on the general thesis that we're not only still in a bear market, but that we are likely to be continuing to track lower here. But what we have gotten here to give the bulls a little bit of advantage here is a continued move here over the past couple of days, as we had yet again deviated from that low support range here at around 18,750 bucks, and we've now cleared through a line of descending resistance that has been holding price down since as far back as May of 2022. This is step number one for the bulls here, and I gotta give credit where it's due. It's awesome to see this here. This does give me some signs of optimism, but it doesn't flip my opinion. And the important thing I really want to drive here, guys, is why I'm not FOMOing into price. We'll talk about that as we go throughout the conversation, but let's just go ahead and talk about what we would need to see here before I can start to really feel a bit of FOMO, feel a bit of excitement, okay? So let's go ahead and get our draw tool here. Now there's kind of either two steps or one step here that I'd really be looking for in order to really get optimistic on price. The first thing here is for us to potentially come here and make support on previous resistance, bouncing off and kicking off a trend and clearing through this line of temporary resistance at around $22,500. This has been a level of contestment here. It was during the capitulation candles back in June of 2022, also in July of 2022, and along with that as well in September, when we had that CPI number release that knocked Bitcoin's price down nearly 10% in a single day. If we are able to get that support on previous resistance and clear through previous resistance and make it support, that is going to give us a good foundation to probably clear through these daily and weekly moving averages, which is the biggest thing holding down Bitcoin. I'm going to hit on that in a little bit here to talk about the significance of what these moving averages between the daily and weekly are likely signaling us here, even though we're getting some optimistic price. But there's also another potential scenario that could play out. We've also got the potential for Bitcoin to just continue chartering forward here going into November with the potential optimism of a Fed pivot, which many bulls are hoping on here, why a lot of people are likely buying at these levels, right? Essentially, we might be able to get a breakout up to this range here. And if we get a positive FOMC meeting, even if they still stick to 75 basis point rate hikes, but if they start to hint that they might be only doing 50 or 25 basis point hikes, that could be the catalyst here to really get a contestment through these weekly moving averages and the daily moving averages, as well as the weekly, and potentially see if we can get above the highs here, this general high range that we had back in August of 2022. If we can see that, that is your telltale sign to potentially start getting some exposure in the market, start getting a little bit optimistic on where things could start to go, and starting to potentially have some skin in the game. And the great news for us here is that roughly around that range is where we took a lot of our positions out of the market. For those of you who are members of the Dash Report Alerts group, you guys know that we took advantage of that summer relief rally in price, and we'll happily re-enter in when we see those signs of optimism at really no added cost to us. If anything, we realized or materialized some gains during that time, or materialized on losses, which we can write off here in the United States. So that's the key thing that I want to emphasize overall, is that so far we are not going to be sitting on the sidelines as this potentially starts to track higher here. I'm not a perma bear. If we start to see the right signs here, I'm not going to wait until we get up to $30,000 to get an entry here. So just want to emphasize that, guys. I always try to keep relatively neutral here. And while we are going to talk here now about why I do believe things are going lower, it's all about having your systems in place, having the right signs showcase in price that showcase that the trend is really ready to move. Because it is important to note, while we've got a nice bump up here, and yes, you could point to the fact we've cleared through this resistance that's been descending, it's important to note this is descending resistance, meaning that Bitcoin really just had to move where it was here back on October 4th, or a little bit higher than where it was here on September 9th. We've gotten many of these short-term rallies here in price after deviations as we come up to retest towards resistance. So it's important not to get too caught off here on every single move to the upside. And as we zoom out on our time frames, we need to understand what's going on here between the daily and weekly moving averages that we have not seen in Bitcoin's history ever. And that is a daily 200 daily moving average, right? The daily standard moving average crossing through our 200 week moving average. Take a look back here throughout the long-term Bitcoin all-time history index. We look back through each previous bear market, the typical crypto bear markets, or what I call really kind of cycle corrections within the secular bull run that Bitcoin's been in throughout its entire history. Take a look back here at 2015. We did not see the daily moving average cross through the weekly. Take a look at the next market cycle in 2018. We saw the daily moving averages yet again getting close, but not crossing through the weekly moving averages. This time around, we have seen something that we've never seen before in history. Not only have we seen a cross of the daily moving averages here on the 200-week exponential moving average, the orange line in our chart, but along with that, we may very well be on pace here to pass the 200-week standard or simple moving average. And if we see that, I think that is an indicative sign that we are likely in a longer-term downtrend. We really need to think to ourselves here, even though we're starting to see some optimism in price, even though price, yes, has been ticking up here roughly since back here in mid-September, we need to ask whether or not this trend is going to be able to hold out. Can we start establishing a real trend of higher lows and higher highs? What's the catalyst that's going to get people excited here, right? Can we get that real significant buy-side candle or the type of technical pattern like we saw in 2016 or in 2019 that really is going to signal that, hey, it's time to pack your bags and get on the ride and ride the wave of the crypto bull market, right? We haven't seen that yet. And again, I think it's very important to kind of remain humble here about that. We need to understand that while Ethereum had a nice move here, it outpaced Bitcoin even over the last couple of days here as we saw some optimism in price. It is still below its 200-week exponential moving average, and it is yet to get above those daily moving averages that are so imperative for us to turn into support to signal that the bulls are back in charge. We've done this through time and time again through previous bull markets, not just in crypto, but in equities. The indicators that used to serve as support during bull markets need to start serving as support again in order for us to really sustain a long-term move higher. Along with that, if we look at the ETH to BTC ratio, we can see that we have still been flatlining here, still holding up towards the highs of 2021 and 2022. This is not a good sign here to see Ethereum holding up this much and not having any kind of room for correction here into the next preceding months. Again, if you're building positions into Ethereum here, I think it's a little bit more of the high risk play. Bitcoin, on the other hand, is at more of a discount advantage, and I would take advantage of that personally, even though I'm excited about the developments on Ethereum. There just isn't much going on in DeFi or GameFi or whatever kind of sector, NFTs, you name it, on Ethereum. I don't see any reason to pay such a premium on it, right? There is some correlation to fundamentals, guys. That's an important thing to understand. There needs to be growth in TVL. There needs to be building. There needs to be new applications. Now, one thing I think that's important to note, some people have been pointing to the fact that equities have been moving up a good amount over the last couple of days. We have had a good move. Most of yesterday's gains were faded here in the futures market. We'll see how the real thing opens up when we start getting the equity market opened up in a couple of hours. But generally speaking, when we take a look at the chart, it's important to not get caught off guard on the broader trend. I will much more likely and happily wait until price were to move higher, or we make that previous line of resistance new support and have the catalyst to set up an entry where we move up higher here for the next bull market. I'm not going to miss on that move, I promise you guys. As a trader, I'm interested, and I can make entries at those ranges with tight stops and make sure I'm protected in case things go south and it starts to deviate again. But I'm not going to be FOMOing in here on a bump up. There are plenty of moves. There was the rally back here in the summer where we saw this. There was the move in March of 2022. Right? We've already had 2 relief rallies in this bear market with some short-term bumps along the way that were always met eventually with lower lows. And this is the kind of chop where a lot of investors end up losing money during bear markets. And I don't want you guys to get caught up in that chop. We got to focus on making sure that we've got the clear signs of an uptrend that is here to stay. Now, one big thing that I've been watching here is taking a look at the altcoin market and the overall dominance here of stablecoin liquidity and Bitcoin and Ethereum. And again, I think this is a big inflection point here. This is kind of a make or break moment here over the next few weeks with the FOMC meeting that is either going to determine that this trend continues to hold support on the 200-day moving average and 200-day exponential moving average, further crushing altcoins and leading more dominance back into Bitcoin and Ethereum and stablecoins. Or this could be where, again, people like myself are completely proven wrong here, where we start to see a trend downward in these plays, meaning that altcoins are garnering more dominance and likely gaining more market share as valuations start to rise up. This is a big inflection point here, and it's chopped right in between now. We're starting to see with the data that we have, it is sitting right between the 200-week moving average and the 200-day moving average. If this level breaks, right, if we start to break higher here and that starts to act as resistance, you can bet that we're likely on our way here towards getting back up to previous historic ranges. Maybe not this quick, we'll see how it goes, but you generally see the levels that I'm focusing on here. That's the key thing. But as we go throughout this period of time and look at the altcoin market, as you all know, the altcoin market is where a lot of the major opportunity comes during the bull markets, but they come through very short windows of time, and you need to know which projects are going to be the standout ones that really are going to benefit in the long run. One of the projects that we're watching here on the channel, especially in the layer 1 protocol space that did very well in this cycle, and I can only assume will also do well in the next cycle, is our sponsor and long-term partner here on the channel, and that's Kava Network, which we've been covering on the channel since as far back as 2020. Now, Kava has been, during this period of time, making a really solid move up as well, getting back up to its highest level since back here in mid-September, and has really been at the same level where it was at back here in June, whereas a lot of other altcoins have been bleeding during this period of time. And Kava has some big news to release here today, guys. Coming out later this afternoon is the official launch of Kava 11, which is going to allow for liquid staking for your Kava tokens, or Kava tokens. Essentially meaning that you're not only able to stake and earn staking rewards on your Kava tokens during the bulls and the bear markets, but on top of that as well, with Kava tokens, they serve as a sort of IOU to your tokens, a claim on those original stake tokens that you can go out there and utilize in a variety of other DeFi protocols. You can utilize it as collateral, you can utilize it as a token to swap from one token to another. There's all kinds of ways that now with Kava 11, you're going to be able to utilize your staked Kava tokens alongside earning your staked rewards. This is really one of the big moves for the Kava network here. And it's going to be launching within less than 24 hours here, as you can start to participate and engage with your Kava tokens in unique ways. One of the really exciting things that I think is important to note here is that with Kava 11, you're not just also getting liquid staking, but you're also going to be getting an aggregator that allows you to maximize your yield on your Kava tokens throughout the network, tapping into some of the best yield generators out there. But the biggest thing I think comes from a user experience perspective when it comes to the fact that as Kava is merging the Ethereum virtual machine and the Cosmos SDK, now within the MetaMask interactive user interface, you're able to now sign SDK transactions, which are tied originally to Cosmos-based applications within the Kava network. This now means that as Kava is powering in 2 of the most impactful networks or layer 1 tools, the Cosmos SDK and the Ethereum virtual machine, you can now through one seamless interface interact with previously owned Ethereum assets that are now bridged into the Kava network through the Cosmos SDK that has been built in to Kava network. This allows you to have a smooth user experience with both bridged assets from the separate environments that Kava has now merged together. A huge move for user experience. I'm really excited for the team making this progress. I'm happy to see that they made sure to launch it at the right time after making sure all the bugs and kinks have been fixed. And I think with Kava Rise, the developer incentive program that they have, this is going to help them position to be one of the really exciting layer ones going into the next bull market. It's the biggest developer incentive program, and it's powering two of the most well-known developer ecosystems with the familiar tools that they already know how to build with on one single network. So I'm really excited to see what kind of applications people build and also how they tap in to Kava 11 liquid staking. But Kava is one of the many networks we're watching here as we go into the next potential bull market in the coming months to the next year. And it's again about finding those projects right here, right now, during this period of time. So big shout out to the team at Kava on that. And again, I think it's one that you guys should keep on your radar alongside Radix, alongside Near, some of the other layer ones that we're watching here on the channel. But that being realized, everyone, I want to go ahead and just kind of close off the conversation here. While it is exciting to see this move here in price, well, we are starting to see Bitcoin tick higher here towards around $20,300. It's again important to realize that we have been here before. This is a range in previous history where we've seen Bitcoin get shot down many times. So it's important not to get caught up on short-term bumps in the market and focus on rather even being willing to pay a little bit of a premium if the trend lets you know that the wave is coming and that it's time to ride with the institutional capital. That's how you make money as a trader. You got to expect here essentially that there is going to be much bigger players with a lot more capital at stake who feel the conviction that it's time to get in. And if you know how to look out for what they're going to look out for to really get those 5, 10, 20% candles that spark off the next bull market, that is going to help you to know when it's time to enter. That's going to keep you from trying to pick bottoms that continuously roll back down to new lows. That's going to keep you from excessively dollar cost averaging when you could go at a much slower pace. So it's about preserving capital, keeping yourself secure here, guys, not taking too much risk, and keeping focused not on the short-term timeframes, but on the long-term timeframes. Anyways, guys, that's it for today's video. If you happen to like it, drop a like, consider subscribing. Check out the link down below in the description if you guys want to follow Kava on Twitter so you can get access to all their major updates. But until the next video, everyone, thank you all so much for watching, and I'll see you all in the next one. Take care, everyone.